Good morning and welcome to NYSE TV Live, everyone. I'm Kristen Schuller here in studio. The Thanksgiving holiday is just a few days away, but investors will be busy in the days leading up to it. On Tuesday, new consumer confidence data and the latest Fed minutes will be made public. One day later, October PCE data, which is the Fed's preferred inflation gauge, will make its way into investors' hands. We'll also see how weekly jobless claims data and a GDP revision impact the major indexes. Well, that is just part of this week's equation. Earnings season might be winding down, but NYSE-listed retailers like Best Buy and Dick's Sporting Goods will reveal their latest results over these next few days. Investors will be closely watching these companies' forward guidance with Black Friday and Cyber Monday just days away. Of course, we'll be tracking the latest developments across the crypto ecosystem as well. Bitcoin right near $100,000 a token. It has been on a tear the past few weeks. As for today, let's take a look at what's on tap in today's show. Wall Street is coming off of a winning week with the Dow closing at a record Friday. The CEO of Strategy Asset Managers is going to join me to break down what could drive markets most significantly this week. Meanwhile, the chief executive at Fetch Rewards is going to join my colleague Trinity Chavez to discuss how his platform is rewarding consumers and what trends he is noticing as the holiday shopping season kicks off. Plus, as you see behind me, NYSE-listed Global Ship Lease is going to celebrate the opening bell. And that, of course, is going to come in just a half an hour's time. The company's CEO and executive chair will join us later after the bell to reveal how the company has maintained its success since listing on the exchange back in 2008, and, of course, what lies ahead. Well, as we are broadcasting from the New York Stock Exchange, we begin, as we always do, with the stock market. Joining me now is Tom Hulick, CEO of Strategy Asset Managers. Tom, great to have you on the show this week. And even though it is a holiday shortened trading week, no shortage of action at all. What is on your radar?
Good morning, Kristen, and thank you for having me this morning. It's going to be a great Thanksgiving week, and happy Thanksgiving to you, your family, and on all the staff. We've been very positive post-election. There's a continuation of the leadership and strength of the United States that is kind of shaping up with the cabinet picks out there. And so when we have our research call this morning, we're going to focus on the continuation of what's going to happen with the leadership in the U.S. going into 2025. We really think that there's going to be a nice rally going into year end.
Okay, so let's talk more about that. Scott Bessent, hedge fund manager, has been selected as the Treasury Secretary, and that seems to be why stocks are rallying this morning pre-market. What do you think Bessent means for equities?
Well, I think that when you shape a cabinet, and for any administration, it doesn't matter what the politics are, it's really the policies that are in place. So if you follow along on somebody who wants to continue this cycle that we're in, the business cycle of growth and entrepreneurship, innovation that's there, Bessent, being a hedge fund manager, a very prominent business person in the community, sees that if we take deregulation and we continue that innovation out there, I think if you can look into 2025, it's going to be a positive year. So I'm very optimistic about this selection.
Okay, so let's talk more about that, Tom. The policies that you anticipate that could lead to optimism in the market as you anticipate.
Well, I think that the voters of the United States voted in an administration that they wanted to see less government and a more deregulation out there. So the importance of that means that we may be able to get forth something in the forms of energy independence or re-energy independence. We like the idea of having less regulation out there for more entrepreneurship. And then if you look down the road, the growth is the most important thing to keep the American engine going into 2025 and beyond.
What are your expectations, Tom, as you look out to earnings, economic growth as well, heading into the next 12 months?
Very positive, Kristen. Our analysts and my team, Joe Traba and Alex Hagstrom and I have been looking at that, and we're expecting over 10% growth year over year for earnings next year. So very, very positive.
So, of course, we are at the tail end of earnings season here. Tom, retailers continuing to report. Walmart was a big one, in fact, last week, showing that shoppers we're interested outside of the grocery aisles as well. What's your focus in the retail space, and what do you think of Walmart in particular?
Well, we like Walmart. It's one of our top picks. Their earnings year over year was very positive. There's been a shift in Walmart in how they're approaching the consumer. So it used to be that you went into a Walmart and it was more of a lower income opportunity to find bargains, but they've been traditionally associated with that low income customer. But now they're kind of catering to those people who make more than $100,000 a year. It's a preferred place to go over Target in our eyes. And we focused on Walmart because of that, because we think the holiday season is going to be extremely positive for the company.
How are you finding, Tom, that consumers are holding up? Perhaps there are some retailers that are outperforming in this space, but by and large, does the consumer seem to be in a strong position to you as we await the end of the year?
I do think the consumer is still spending, and I do think that they're strong. That's why if we go into the holiday season with this type of momentum and kind of this new type of outlook, a refreshing outlook into the Christmas and the holiday season, we're going to be seeing very nice numbers coming out of the retail industry. And you can even carry that over into some of the other companies that we follow as well.
Now, I'm curious, in terms of a new administration, changes obviously happening in D.C., a red sweep that's going to start taking effect in January after the inauguration. What does that mean about technology, innovation, artificial intelligence, Tom? I mean, that buzzword alone, artificial intelligence, has been at the forefront of many investors' minds for at least the past 18 months.
Well, it's a topic that worries a lot of people for artificial intelligence. However, it's an incredible partnership that we're in the very early stages of understanding and benefiting off of. So if you look at what AI is doing across the board for some of the downstream companies, including not only the tech sector, but going all the way down even into the industrial sector, we really have incredible opportunities seeking in front of us for this. We can talk about Fortinet. We can talk about some of the other companies as well that on the cyber side, if you'd like.
Yeah, before we dive into some of those specific companies, Tom, I do just want to ask you, of course, about the Department of Government Efficiency, DOGE for short, if you will, for those following the cryptocurrency market. And in terms of the policies that we are expecting this new administration to enact, is there a target in terms of how much you think can be cut, for instance, from government spending with Elon Musk now working for President Trump?
Well, I think it's a very ambitious target to cut $2 trillion of wasteful spending that's out there. But any cut is going to be beneficial down the road. And you keep in mind that the deficit right now is so large that even if you shaved off 1 or 2%, it's going to be material all across the board.
And in terms of the cyberspace, of course, that does sort of go hand in hand with technology, AI, as we were talking about earlier. When it comes to cyber, Tom, what do you think needs attention?
Well, the continuation of being a leader in this area, for one, that's the most important thing. In the United States, and our cyber companies are continuing to lead out there. But cybersecurity is very important. Artificial intelligence has positive impacts in the area. And if you take a look at what the damage that can happen, and you look at the potential threat that's there, we're going to be pumping a lot of money into the cybersecurity space, and that's why we like Fortinet, which is ticker symbol FTNT, for our top pick in that cyber area.
Yeah, I want to hear more about the fundamentals in place there, Tom, that do make that stock attractive to you.
Well, one, there are many companies in the area. The reason why we like Fortinet over somebody like Palo Alto Networks is we know that they're a global leader in cybersecurity. We know that AI has impacted their balance sheet. They continue to develop the network security that is so important in the area. And if you look at the fundamentals of the company, the management is fantastic, and their numbers are hitting in all strides.
Tom, I am curious to get your take on cryptocurrency because alongside the equity market, we have seen Bitcoin absolutely skyrocket. How does your asset management company view crypto?
Well, we don't hold any crypto in our portfolio, but we understand that it's going to be important to be able to manage the expectation of the client and also the global expectation for what's happening in the crypto area. So I think that what we're focusing on as we look into the future is how are we going to manage it, and is it going to be managed in an orbital wallet? Is it going to be made possible with just your iPhone that you see here? I think that the ability to break down cryptocurrency and convert it into something of like a fiat maybe something that's ambitious, but it's taking shape. And the Trump administration is really signaling that crypto has become more relevant than the previous administration. We're focusing a little bit on it, but we don't hold any crypto.
Tom Hulick, CEO of Strategy Asset Managers. Tom, great to have you on the show this morning. Thank you so much.
Thank you, Kristen. Happy Thanksgiving.
All right, let's take a look inside the boardroom as Global Ship Lease prepares to celebrate the opening bell.
Storm clouds were gathering for the global financial crisis, which fortunately we managed to weather. And so here we are back at 16 years of age to celebrate what has been an extraordinary journey. And the reason it's been an extraordinary journey is really all of the people who are here today that have been working so hard to make GSL a success. And also many people who aren't here today, people back in Athens and the offices there, and of course thousands of seafarers at sea. So this is an extremely exciting moment and an opportunity to really celebrate all of that hard work and effort. So really delighted to be here. Very, very exciting indeed. So thank you to the New York Stock Exchange for making this possible.
So as you can imagine, over a couple centuries, we have a lot of traditions here at the New York Stock Exchange. The most notable one is what we'll do at 9:30 by ringing the bell to open the markets.
He's going to be joining others of his team, of course, on that opening bell podium soon, and they'll be joining our Trinity Chavez on the trading floor after the opening bell. Well, GSL executives will be making their way down to the floor after that ceremony in the boardroom to sign the distinguished guest book and, of course, open the markets. Global Ship Lease, which listed on the stock exchange back in 2008, owns and operates container ships for the big liner companies like Maersk or CMA CGM. GSL focuses on mid-sized ships that operate in hundreds of ports around the world. And up next, we will continue our coverage of GSL, the opening bell, and the markets, but we'll also take a deeper dive this holiday trading week into the retail space. Of course, big earnings continuing to roll in from consumer companies and as people take advantage of Black Friday deals. The CEO of Fetch is going to join us on the other side to talk about how his platform is rewarding shoppers. Up next.
So, John, tell us a bit about the partnership you have with Santander and Openbank.
It's a Spanish man and it's a Spanish company. This is my only Spanish partnership. Santander has a long history with the game of golf and being a professional golfer. It's a true honor to be a part of it. And then, well, we're here at the New York Stock Exchange for the opening, the soft launch of a new online bank here in the U.S. being Openbank.
Now, John, when deciding which brands you partner with, what factors do you consider?
I try to get brands that represent me in some kind of way, right? And trying to, at least having the opportunity to partner with somebody from Spain, a family that grew up in northern Spain like myself, not the same city, but close enough, that has a close history with the game of golf. I thought it was a no-brainer, right? They've also been involved in other sports like Formula One and many others. I think that was an easy choice, right? But I think every brand I've had, I try to see what their expertise is, what their motto is, and what they portray to the world, right? And that's what I try to link myself with. So my image in itself, or what is the name John, is either uplifted by those brands or related to those brands, right? And I try to be picky. Luckily, I've been able to have some great partners to join with and keep on going on those ventures.
Now, Santander is growing in the US market, which is a journey you yourself are familiar with. Do you see any parallels between your own experience in the US and what Santander is doing today?
There is a difference when you're playing in different parts of the world. The golf courses are different, the setting is different, right? So to be as complete a player as you can be, you have to play in all different environments. And coming to the US is a massive one, right? 3 of the 4 big majors are played in the US, all the big events are played in the US. So being able to come here.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio as we await the market open. The Fetch Rewards platform, founded in 2013, lets shoppers earn points for their purchases and then redeem those points for gift cards. For more on this, I want to bring in my colleague Trinity Chavez with more. Trinity, good morning.
Good morning, Kristen. That's right. So with over 58 million downloads and partnerships with 750 brands, Fetch is transforming how we shop by turning everyday purchases into rewards. And as the holiday season is here, the app's new features like Fetch Shop and a browser extension are set to make this year even more rewarding. Joining us now to talk more about this is Wes Scroll. He is the CEO of Fetch. Good morning, Wes.
Good morning, Trinity. Thanks for having me on the show.
It's great to have you. Now, with Fetch Shop and the new browser extension launching just in time for holiday season, how are you planning to make this shopping period more rewarding for users?
It's almost like the timing was on purpose, but the new extension we're really excited about. You can install it on any Chrome device that you have, so you can have it live on your computer. You can put it on your Safari browser as well on your phone. And what it will do is anytime you're shopping at any of the thousands of merchants that we've partnered with, you can earn Fetch points for every dollar spent. So this is taking you beyond the traditional brands that we represent to now rewarding you for things like clothing, even hotel purchases, car rentals, really you name it, you can now earn Fetch points on.
Wow, amazing. And that's going to be handy, especially when the gift giving season approaches. Now, I do want to also talk to you about the insights. You obviously have a unique insight into consumer spending and when it comes to habits and trends. So what trends right now are you noticing as we head into the holiday shopping season, and how are brands leveraging Fetch to engage with customers?
Yeah, well, we've seen that inflation has steadily, come back down to a normal level. The reality is there's still a ton of pricing pressure on the consumer that they're feeling every single day. And with that, we see that they're turning to other solutions to try to be able to offset some of that increased cost of living. And I think that's where something like Fetch really shines. It's enabling consumers to get rewarded for those everyday purchases. That's where a feature like Shop becomes really important too, as we gear up for the holidays. We see a lot of people are looking to trade down to private label and store brands, but yet they still want to have the confidence of getting that national brand when they can. And I think that's where they turn to Fetch, because Fetch is enabling them to get rewarded for those national purchases that they made, for every dollar that they spent, and save up for a gift card that we hear a lot of our consumers are just using for providing presents to the family, or maybe a extra special dinner for the holidays. So it's awesome to see that it's actually able to enable them to have a more rewarded holiday experience.
And just to be clear, so the people who are using your platform and they get these gift cards through their shopping experiences, they're able to then gift those gift cards to anybody they want?
Yeah, once they have their digital gift cards, they can do anything that they want with them.
Wow.
We see that some people will use them to actually go and buy presents themselves, or they'll just gift the card entirely and hand it over to a friend or a family or someone that they want to let them know that they're thinking about them.
Now, many retailers and brands are ramping up their promotions during the holidays, but how is Fetch collaborating with your 750 plus brand partners to create unique opportunities and experiences for your users?
I think it's top of mind for all of our brand and retail partners that they know consumers are looking for a little something back right now. So what we see that they're doing is leaning into it. We have the most rich offering of rewards available today than we've ever had in the Fetch ecosystem. We've already given out over $1 billion in Fetch points, and now we're seeing that rate of how fast people are accumulating really start to tick up. So during the holiday, we see a lot of these brands and retailers are actually doing offers where you can double up. You might be getting rewarded from Coca-Cola, but then on top of that, you're also getting rewarded from the retailer, maybe say for Albertsons. So you're all of a sudden earning fetch points on that purchase from 2 different places. And that means you're actually accumulating faster and getting to that gift card than really ever before possible.
Now, you mentioned inflation as one of the key factors. While many customers are being driven to your platform to help save money where they can, but how has other economic changes impacted your business strategy, if any, Wes?
Well, I think one of the things we're seeing the most is actually on the partner side. With this increased pricing pressure that they're experiencing, there's a flight towards quality. They want to be on platforms that can deliver highly targeted offers to the right consumer at the right time. They don't want to see that it has this spray and pray approach. They want things that can be really targeted, specific to retailers or consumers. So I see that we're getting a lot of inbound that's coming to us knowing how good our targeting is. Our average consumer is submitting over 31 receipts per month. That means we can see across all of the different shopping that they do and make sure for our brands or for our retailers that we're targeting the right person and measuring to make sure that we are driving incremental sales lift for them while delivering the savings for the consumer.
Yeah, because analyzing those receipts tell you so much more than just what people are shopping, right? You get an inside look into their lifestyle, their diet even, by the kind of foods that they're purchasing. How has this been beneficial to really help leverage and scale up Fetch's business strategy?
Yeah, this is the fundamental data that is powering the ML and AI systems that we have behind the scenes. So while it might not be important for, Coca-Cola to know that it's Wes Stroll that they're talking with, what's really important is they want to get to someone who is like me, showing all the purchasing behaviors that I've already been showing. So what we're starting to see is that they know that the best way of measuring whether or not you're targeting the right person is based upon your actual purchasing behaviors, less so the demographics, where I live, how old I am. And that truly, to understand a consumer, you have to understand those transactions. And those are, the data points that our system is processing. Over 12 million transactions a day flowing through the system from our consumers, both online and offline, that are powering all of those systems to then make sure that the right consumer is getting it. We're delivering efficient outcomes for the partner.
Well, thank you so much, Wes. It's always a pleasure speaking with you. Wes Stroll, he is the CEO of Fetch.
Great to see you. Thank you.
Now we're going to take a quick break, but don't go anywhere. We have the opening bell when we come back. Since we last talked, I know you have a major announcement. You just made the largest deal in the ASPM space. So talk to me.
Application Security Posture Management market, yes.
Yes. And I understand that it's with an NYSE listed company. We can't say the name.
Fortune 10.
Yes, Fortune 10 company. Tell me about this deal.
First and foremost, this is a deal that changes startups, okay? And we're super, super excited about it. And why they decided to partner with us for 3 years, very large deal, was technology that we developed. We actually helped them automate all their security risk assessment questionnaires, build a real-time software inventory, and prioritize, remediate, and prevent risks before they get to the cloud.
Let's talk about how Apiro recently launched the risk detection at the design phase. Can you talk to me more about this and how earlier detection in the software development of these kind of problems will help enhance the security outcome for businesses?
Based on NIST, the cost of fixing a defect at runtime when it reaches to the cloud, 100x more than in the design phase. So what we did, we developed our own private LLM model that scans every feature requests that gets into the development lifecycle. And automatically, we generate threat modeling, stories, mitigations before one line of code is written.
I do want to talk to you about a new product that I know that you are going to be unveiling soon. Can you tell me more about it?
I can't share all the details, but I will say the following. We're using the Apiro deep code analysis technology to identify our software architecture. The next phase is to visualize your software architecture in a very, very interesting way. It's like a living and breathing organism. It changes every day. So you need to visualize it to help developers write.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio. Artificial intelligence is gaining traction across every sector, including retail. Bernadette Nixon, the CEO of Algolia, sat down with our Judy Shaw to discuss how the company's AI-powered search technology is enhancing retail efficiency and e-commerce experiences. Take a look.
Bernadette, it's wonderful to have you on Floor Talk again. Thanks for joining me.
Thank you very much for inviting me.
Now, Bernadette, like many industries, retail is continually looking for ways to improve margins and generate greater efficiencies. Why has generative AI become so important for retailers, and what new capabilities does it offer, and how does it improve retail e-commerce methods?
So it's interesting. What I would say is what we observe is that everybody is experimenting with Gen AI. And I think that's the operative word, experimenting. FOMO is alive and kicking, and everybody wants in. When you think about a retailer, though, what are they looking to do? They're looking to improve their customer experience. They're looking to improve conversion, revenue, all that sort of thing, ultimately with the idea of engendering greater loyalty. So what we did was we actually did some research. And the top three things that both groups, that was common across both groups, was the fact that they wanted shopping guides, so generative shopping guides, product comparisons. Then they also wanted more of a conversational experience. It's interesting because when you think about those things, you think about the shopping guides or the product comparisons, they're the types of things that you would need to give you an assist if you were browsing. If you were maybe looking for inspiration for a Mother's Day gift, or if you were trying to choose a TV and you wanted to make sure it was good for gaming, but not for, you weren't that big on streaming. So those types of things are very time consuming for marketers and merchandisers to create, but they're also what consumers are craving to help them make some decisions. And so that's why these areas, it's not surprising they came up as number one and number two in our research, because they're hugely intensive for brands and retailers to create, but yet that's what we as consumers are craving. And so Gen AI on its own is not sufficient for retail. Because think about it, you don't want a conversational experience recommending something that you don't carry in your catalog. So you actually need retrieval, augmented generation, as well as your catalog. So you need the combination of the generative AI capabilities, but bound by your catalog so that you can maximize your revenue. So I think that's why retailers are looking towards this. They want to experiment, they don't want to be left behind, and they're trying to increase conversion and help their customers.
And Bernadette, what do you believe is the growing importance of data?
We all know, or intuitively now, we all know that AI requires fuel, and that fuel is data. Now, that's not news to the data scientists or the ML engineers. Now, the C-suite understands that, and the business more broadly gets that. And so, for example, if you take a look at our portfolio, we have an AI search product. We've had AI in the form of natural language understanding, so understand how we speak as opposed to just keywords, and large language models for years. We actually have more records, data, to search than even on Amazon. We almost have 2 times their data, which is quite unbelievable when you think about it, but we're servicing 17,000 customers globally, so that's why. And then when you take a look at our click and conversion data, which is, you might click on a pink blazer and a black blazer, we record all of that information, but we respect your privacy at the same time. That's really important to us. But we're collecting all of that data as well, because then you can really adopt a personalization strategy as a retailer. And so the rise in that type of data that we've seen in our own, within our own 4 virtual walls has increased 6-fold in just over the last year. So I guess at the end of the day, the companies that have access to large, scalable, real-time, diverse data sets are ultimately going to win the AI solutions race. So that's why it's important for us to deliver the best service we can to our customers.
Our thanks to Judy Shaw for that interview earlier. Of course, you're taking a live look at the opening bell podium. We are set to kick off trade with GSL ringing the bell.
we're here at the New York Stock Exchange. You're here with the Startup Challenge by Snowflake.
Yes.
So tell me, what were your key takeaways from this competition, and how do you see these insights influencing Big Geo's journey forward?
It was incredible being down there for the Snowflake Startup Competition. It was really encouraging to see where they're going with their ecosystem, and what they're doing with native apps specifically is where we're kind of going to market with them. And the support network for me was the biggest takeaway. It was once we met with them and we were like, we're going to work together, it was just everybody piled in and we got the job done. So I was very encouraged, and I know Brent can speak for that as well. It was knowing that we picked the right ecosystem to go to market with. Snowflake was that for us.
Now, Brent, the data center and cloud landscape is evolving rapidly. How does Big Geo's technology align with the future of data centers? And what role do you envision for your company in this transformation?
It's an incredible technology for the data center space. I mean, we're having these conversations on a daily basis with some of the world's largest hyperscalers. Our technology sits right up against, it's built on first principles solutions from the ground up to increase performance at the data center. So we're looking at this technology as a way to reduce the amount of electricity consumption for data centers when it comes to geospatial performance, which is vastly becoming or quickly becoming one of the largest computing workloads at the data centers. So it's a very important technology to align with our hyperscaler partners and give them more, save them on electricity so they can spend that on artificial intelligence. So,
all right, now, Brett, we're here at the New York Stock Exchange.
It's
You're
awesome.
on the trading floor.
It's awesome. I've seen all the movies.
Well, tell me, how does it feel to be here? And how does this experience align with Big Geo's goals and vision?
Well, first of all, it's great.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler. We are officially open for trade, and no one better to start our week with after the market open than our in-house resident senior market strategist at the NYSE. That's Michael Ranking. He joins me now in studio. Michael, great to see you.
Good morning.
Kicking off a holiday-shortened week, but no shortage of headlines, that's for sure.
No, absolutely not.
Pretty strong gains at the open. What do you make of this market?
Yeah, so I think, just to take a little bit of a step back, right? So, we had a strong reaction post-election with, kind of the rising tide lifting all boats, markets traded significantly higher. That following week, we started to pull back a little bit, right, as markets started to make some differentiation as President Trump began making some nominations to his cabinet. And then last week, we had, kind of markets recoup most of those losses. We had some pretty solid corporate earnings, right? Markets got a little bit of kind of an understanding of what that cabinet was starting to look like, and we removed, kind of some of the overhang of some of the more controversial candidates that had been put out there, and markets have kind of reacted positively. This morning, we had, on Friday afternoon, we had President Trump nominate a new Treasury Secretary.
Yes.
That's being very well received by markets. And then just before I came on this morning, there was some headlines that Israel and Lebanon had kind of reached a ceasefire deal in principle, which has oil prices moving pretty sharply lower.
Okay, so before we get to geopolitics, which I'm glad you bring up, Michael, because that does seem to now be moving markets again in the past month or so, I do want to return to some of Trump's cabinet's appointments. Pretty quickly, he's been putting his intentions out there in terms of who he wants to be within his cabinet, including that Treasury Secretary, as you mentioned. Who do we know so far, and how has that impacted stocks? What more can you tell us?
Yeah, so I think from a market perspective, right, the Treasury Secretary is the most important kind of nomination that we've gotten, and markets are applauding that, not only from a perspective of equity markets, but we're also seeing Treasury markets rally this morning, right? So Scott Bessent has talked about kind of the three arrows. So that's getting fiscal deficits to 3%, GDP to 3%, and then 3 million additional barrels of oil production in the U.S. Right, so we're seeing kind of the fact that he's got this kind of fiscal, he's viewed as sort of a fiscal hawk, is helping Treasury markets pull back, right? And that has been one of the things that has been concerning markets post-election. That move higher in Treasury yields. We're breaking below last week's lows right now, and that's really kind of helping, not only equity markets but also that breadth expansion, which everybody's been looking for.
After the strong post-election surge. We took a bit of a breather, of course, in markets, but again, right near record highs, if they're not at record highs this morning with these strong gains.
Pretty close.
Yeah, pretty close. And most of my market guests have been saying they feel pretty bullish about what's ahead. Walk me through the bullish case.
Yes. So if you think about it, and we had talked about this ahead of the election, right? I was of the viewpoint that it almost didn't matter necessarily who was actually elected if we had an outcome, because the backdrop is pretty positive, right? So we have an economy that continues to kind of perform well. We continue to see the consumer remain resilient. We also have monetary policy moving in the right direction, right? With the Federal Reserve, beginning to to cut rates, though that's starting to come into some question as to how deep that rate cutting cycle might be. And then you have the positive seasonality, where in election years you do tend to see that November and December timeframe, very strong performance in that time frame as you remove some of the uncertainty related to elections. So we have all of that playing out. In addition, right, we've had volatility moving lower, which will bring back in some of the systematic flows, right? And then you're also in a time period where it's also the heaviest period of kind of stock buyback, right? So that continues to keep a bid beneath the market here, right? And you typically will see markets trade pretty well up into kind of an inauguration day, where you sometimes see a little bit more choppiness.
Interesting. So I got to ask about the consumer, right? I mean, I am just getting inundated with early Black Friday deals. Some of them, I must admit, Michael, are pretty good and enticing. And we know that consumer spend is about 70% of the overall economy. Of course, that includes retail, but also includes services. So not just those perhaps clothing items that I have been racking up. But based on your view, it is true. I'm curious, what is the state of the consumer? Do you think that these retailers will see a positive shopping season?
Right. So we started to hear from some of the major retailers last week, right? Most importantly, Walmart, which is the country's kind of biggest retailer.
Yep.
Right. And their commentary was kind of cautiously optimistic, right? They've started to suggest that you're seeing a pickup in kind of that discretionary spending categories. Now, they do sit in sort of a unique spot where you've seen kind of that higher income consumer has been kind of searching for value and kind of trading down, so to speak, into Walmart. So they've been a very big beneficiary of that. We've also seen TJX be a beneficiary of that sort of trend over the last couple of years. But as they talked about the holiday shopping season, they do say that that the consumer is shopping for deals, right? They're being more conscious about where they're spending, but they're continuing to spend.
So as we see action as well, we talk so much about stocks, but you also have been mentioning the bond market, and that of course is important. It does impact how stocks move. I want to dive a little bit deeper into the bond market, into the dollar, the state of those different assets, and of course what it does mean for stocks. What can you tell us?
Yeah. So in terms of kind of treasury yields, we saw treasury yields, interestingly, move up about, the 10-year yield move up about 80 basis points from the time the Fed actually did a 50 basis point rate cut. So you don't typically tend to see that. That happened in a couple of different waves, right? And I think the first piece of that was this expectation that the soft landing narrative was still in place, right? That the Federal Reserve had gotten in front of, kind of any, remove some risk of a policy mistake of not moving quick enough, right? Then we had some China stimulus, which is added to inflation expectations, and then the election, right, where kind of that's just viewed as a pro-growth, potentially inflationary kind of time period. So you saw yields move higher. Now what we're seeing this morning is the pullback, kind of given the Treasury Secretary's kind of fiscal hawk kind of stance, right? And then there's also kind of the big question though from a Federal Reserve perspective right now is you've started to hear some hawkish commentary from officials suggesting, right, that the pace of rate cuts is going to slow going forward, right? That the ultimate destination may not be quite. We may not see as many rate cuts as people had thought, right? So we're seeing kind of Treasury yields get stuck here in this kind of mid 4.5 level.
But hopefully if the economy holds up, the market can still rally, of course, on the back of that.
Yeah, and that's been one of the points that I've made is that markets and the economy will digest a higher interest rate environment as long as it's happening for the right reasons, namely positive economic growth, not inflation, right? And as long as that is the case, right?
Yes.
I think the markets will digest that well. And then in terms of the consumer, as long as consumers have jobs, and that goes to next week's jobs report, right? I think the consumer will continue to spend.
Good things for us to watch. Michael Ranking, NYSE Senior Market Strategist. Michael, thank you.
Thanks for having me.
Yep. All right, well, after the break, Global Ship Lease's CEO and Executive Chair is going to join Trinity Chavez on the trading floor. Stay with us.
What you need is the commitment of all the employees that it's a priority, that we value culture, that it's a differentiator, that it helps us better support our partners and our customers. And I think all 20,000 people truly believe that. And so we're focused on it. But you have to be willing to change too.
Yeah.
And, that's always one of the challenging parts. When you think you have a great culture, it's easy to say, okay, let's just not break it.
Yeah.
But if you just say that, you say, let's just not break it, okay, then you're not evolving, right? And the world around us is changing every day. And you have to respond and react to that. And that means you have to do that for the business and respond to those external dynamics, but it means you have to do it for the culture as well.
Yeah.
We've been through a very difficult few years as a country, and that means that you need to support your employees differently given those circumstances. But I'll tell you, it's really important to listen to that cohort, because their needs and the pressure that they're under is very different.
Yeah.
And that's where I think, we add a lot of value. And we add a lot of value to those partners, even outside of the credit program. Like, we can actually help them on other topics. HR, finance, other things that we do where we have a more established process will help our partners. And we do that just in the spirit of partnership. But it means a lot to that group, because they do have a totally different set of demands. And one of the things we did in the reorganization is we realized that a lot of what they need and a lot of what we needed to do to support our partners was common across industries. The customer experience has never been more important than it is right now. There is very little friction.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Earlier this hour, NYSE-listed company Global Ship Lease rang the opening bell as it celebrates its listing at the NYSE. Trinity Chavez is on the trading floor with more. Hi, Trinity.
Hey, Kristen. That's right. So Global Ship Lease has grown its fleet significantly since its 2018 merger, and today marks a major milestone with their first ever board meeting here at the NYSE. To talk more about what's driving its success and what's next is CEO Tom Lister and George Giouroukos. He is the Global Ship Lease's executive chairman. Good morning, Tom. Good morning, George.
All right, good morning.
So, Tom, let's start with you. You just opened up the U.S. equity markets, fresh off of the Bell podium. How are you feeling right now?
Super excited. I mean, it's an incredibly exciting experience, first of all, and this is a big year for Global Ship Lease, because for the first time we hit $1 billion market cap, which is a huge milestone for any company. So we're very, very excited to be here.
And George, being fresh off the Bell podium too, seeing Tom ring the opening bell, opening up the U.S. equity markets, how are you feeling in this moment, having all your team here supporting you?
We feel great. This is a great honor for us to be here, and an achievement in our career. So I'm more than happy, to say the least.
Now, Tom, you've had significant growth in recent years, doubling, right, since 2018, since the merger took place. Talk to me about the significance in this and how you expect to continue this momentum.
Sure. I mean, it's not so much about growth in our business. We're not growing for growth's sake when it comes to container ships. We're looking at choosing the right assets that are going to drive attractive returns for our shareholders, and that's what we've done. So over the course of the last 5 years, I think we've generated total shareholder returns of roughly 350%, which is about 3 times the S&P 500. So it's returns really rather than growth that we're focused upon.
Incredible. And George, I do want to ask you, to keep up with this momentum, there has been geopolitical shifts, there's been global economic shifts. How are you keeping up with this to adapt to the economic climate while also meeting customer needs and demands?
Well, our business is a cyclical business, so, that's where we make money. The market goes up, the market goes down, And we buy ships when the market is down, and we charter the ships, lease them when the market is up. And we milk them as cash cows, as we call them, as a joke. We keep our ships employed for as long as we can. We usually take long-term charters and build up secured cash flow for our shareholders.
And Tom, this company, Global Ship Lease, has been listed with the NYSE community for 16 years.
That's right.
Talk to me about some of your proudest moments and achievements during this time and how the NYSE has contributed to this growth.
Sure. I mean, well, we started off in August of 2016, which, as you'll probably remember, were that the storm clouds were gathering for the global financial crisis. So right out of the gate, we had some challenges. But we're really proud to have survived those times and thrived. And in 2018, as you mentioned, Trinity, at the outset, we merged with a company that had been built up by George and his team with a private equity company here in the US. And that merger, I think, really released the earnings potential of the company. So I think survival followed by thriving on the back of a merger. Those are the two things that I would point to.
And speaking of business strategy, George, I do want to talk to you about why is it that your focus is smaller to mid-sized container ships as opposed to larger ones?
Well, it's simple. The reason is simple. The large container ships, which can be like this very tall building you have here in the States, the Empire State Building, that's the length of the ship, the height of the building. So these ships, they are the basic ships that our customers, the liner companies, use. But these ships can go only to very few ports because of their size. We prefer the smaller to mid-sized ships where we have a lot more ports that we can go. We have less volatility because we can always find an employment for these ships. And these ships also, we buy them and improve them by spending a bit of capex on them. And then these ships, we unlock a lot of possibilities and profitability.
And speaking about possibilities, Tom, I do want to ask you where you see the biggest opportunities right now, especially as I mentioned earlier, we are facing a lot of geopolitical shifts in this moment. Where do you see the biggest opportunities?
Well, for shipping, always the opportunities are in the cycle and in the volatility. So we actually welcome changes in the environment because that's where the opportunities lie. So as long as you have the balance sheet and the optionality to chase these opportunities, that's precisely what they are. They're not challenges, they're opportunities, and we like to think we're well placed to pounce. And we follow what has been the Greek model of ship owning, and the Greeks have been making terrific amounts of money in shipping for generations. And their model is be patient, be disciplined, and be ready to be nimble, to jump on the right sort of ship purchase opportunities when they arise. And that's our mantra.
Be patient, be disciplined, and be nimble. I love that. George, talk to me about what your key priorities are for the next 3 to 5 years now.
Well, our priority is always to make money for our shareholders. Obviously, we want to, build our fleet when the time is right. We do not buy ships when the market is strong. We buy ships when the market is weak, or we do sell and lease backs when the market is strong, which effect is the same thing as these ships. When they roll out of their charters, they have amortized to values that we feel comfortable with. So our strategy is to always pick and choose the right ships. We have the financial strength to acquire ships at the right time, and this is really the strategy. There's only one golden rule in shipping: buy at the right time.
Buy at the right time. I think that could apply to a lot of different sectors, right, George? Tom, I do want to ask you one more question. We have about 60 seconds left. Sure. It obviously takes a hugely committed team to achieve this kind of success. Would you like to tell anybody anything who's a part of your team who's watching back at home?
We're not going to make a shout out for any particular names, but I mean everyone that's a member of the team we value hugely. It's a real privilege to work with the people we do.
Amazing. And George, would you like to add to that?
Well, we would be nothing without the team. It's a team game. It's not a one-man show. It's a team game, and we are very, very proud to have this team next to us. This is a big privilege, and I've been with most of the people in the team for like 30 years now.
Well, thank you so much, George. I really appreciate that. Again, that was Tom Lister, CEO, and George Giouroukos. He is GSL's executive chairman. Now, stick around. We have more NYSE TV Live right after this break.
So we're not following a cuisine, we're actually really leverage the culinary art form of churrasco, which is very traditional Southern Brazilian cuisine. We've been doing it for 45 years. So you're right, we only have 72 restaurants in America, but 96 globally. But our whole essence of our brand is about scaling the authentic culinary art form that we know our guests love around the world.
When it comes to cuisine, there's many different trends out there, right? Especially as people are more health conscious these days. So how are you keeping up with these trends, but still being true to your brand?
What we love about it is everything we serve is nutrient dense and good for you. So it's up to you and your diet and how you like to dine, but we've done that for 45 years. What's exciting is our innovation around that is even getting better. We just rolled out whole branzino seafood, so we're just now beginning the fresh seafood platform, and we're really excited about that.
Ooh, that sounds delicious.
Yeah,
we're gonna have to try it when you open up your new restaurant,
That's
just
right.
a block or two away?
That's right.
Yeah, talk to me about when that's gonna be opening.
So we're opening by probably like middle of December, but it's World Trade Center, really excited. So it's our second one in Manhattan. We have one in Midtown. It's 18,000 square foot. The one in the World Trade Center is ground level. It will be about 5,000 square foot, so really excited to open that. Can't wait to host you there.
Now, you've experienced significant growth in recent years. We talked about over 90 restaurants worldwide, over 70 here in the United States. What would you attribute your success to, and how do you think you're going to continue this momentum?
We scale our culture first by really investing in our people. A lot of training, because this is an art form that is unique to us. We're the category leader in it, and we are scaling it globally. So when you think about how to do it well, to keep the authenticity, we focus on our human capital pipeline first. Now we have visibility of 3 years of sites ahead of us because we have 3 years of people, I would say talent ready to do it.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in the studio above the iconic trading floor. And let's take a look at how stocks are faring as we start this holiday shortened week together. Decent gains. Take a look. The Dow at 430 points, a gain of almost 1%. That index is at a record high. And of course, the other major indexes near records as well. This comes on the back of incoming President Trump's cabinet appointments, specifically for Treasury Secretary. Investors across asset classes cheering that as they do view the pick, a hedge funder, to be positive for stocks. That's driving markets today, as well as what we continue to follow in the retail space, especially with retail earnings underway and the holiday shopping season kicking into full gear. So on the topic of retail, of course, with the evolution of technology in this space, more consumers are using digital wallets to make purchases, and our Trinity Chavez has more.
ID.me is a company working to make it safer and easier for you to prove your identity online. But how are they going about doing that? We're going to find out from the CEO on this episode of Taking Stock.
What I learned in Iraq from General McChrystal is that it takes a network to fight a network. So when you have a network of bad guys that are sharing information and adapting in real time, you need a company for good, a company like ID.me, to come in and to create a networked view in order to counter those adversaries. So the same convenience and efficiency that we're bringing to consumers' lives, we're actually dramatically increasing security. And during the pandemic, there were 7 states that credited us with stopping over $270 billion worth of fraud.
Now, you've experienced very significant growth, growing by 500%. Talk to me about what's driving such success. How do you expect to continue this momentum?
We don't sell data unlike a lot of the data brokers that we compete against. We put you in charge of your information. And as there's this dual mandate where consumers want to live convenient lives, they just want to be able to click and go and get access to what they need, whether it's government, financial services, healthcare, whatever. But you've also had this exponential increase in fraud. And it turns out when we go into different customers, we're doubling pass rates for digital access relative to data brokers at the highest levels of risk and security. And we're dramatically reducing call center volume and fraud. And so having the best product really matters. And the data shows that we're delivering a much better experience relative to legacy methods of identity verification.
Who are your customers? I know you work with a lot of government agencies. Why do you think that is?
If you think about where identity comes from, it comes from the government, whether it's a military ID card, a passport, a driver's license, all of the IDs that we use to prove who we are, they come from government interactions. So if you can win and secure the government, then you can help people open up a bank account, you can help patients get access to healthcare records, you can help folks prove they're over 21 to buy a bottle of wine, whatever those use cases are. But it all starts with government as the center of trust.
So I know that you work a lot with NYSE listed companies as well, including MGM and Visa. Talk to me about that.
So MGM was a big part of our transition into the hotel check-in space, and now it's expanded to Wynn and other companies. But they were looking for a better way to do guest check-in. Literally, like before we went live, I was passing this lady, she was at a convention, and she said, this whole trip's been amazing. And then she went, except for the 45 minutes we had to wait in line to check in. She's like, other than that, it's been amazing. And I was just smiling because we were going live the next week with digital check-in. And after we went live, those lines have disappeared. And we give millions of MGM guests an average of 15 minutes of their life back.
That's incredible, because time is the most valuable currency.
That's right.
You don't ever get it back.
And that's one of the cool things about running this company and working with other NYSE companies is that we get to create value for everybody in a way that makes life better, because who wants to spend time waiting in line?
Improving quality of life.
That's right.
Amazing. Well, thank you so much, Blake, for joining me on Taking Stock.
Thank you, Trinity. Appreciate you having me.
All right, thanks to Trinity Chavez for that interview. And as we talk retail and cyber safety, I want to bring Trinity back in from the trading floor. Trinity, great to have you back on the show after a week away. And this is such an important topic, of course, heading into the holidays.
Absolutely, and it's been at the forefront of so many conversations as we enter the holiday season, Kristen. I know that you and I were talking about so many deals that we're seeing right now online, but again, that brings up the conversation of cybersecurity, right? Bad actors out there stealing credit card details as we're, making these purchases online. And so this is really a topic of concern for many. But, across the board, retailers are really cracking down, taking those extra precautionary measures. And of course, we're going to be probably covering that more on our show with these cybersecurity conversations, especially as we enter more into the e-commerce space. I know I have been trolling all of these websites, Kristen, trying to get all those Black Friday deals that we saw started back in October.
Yep, and I got to check out Fetch Rewards too after that great interview earlier in the show with the CEO that you did up there in studio. It is a lot to cover, of course, but we always have our viewers in mind on NYSE TV Live. For Trinity Chavez, Kristen Scholler here at the Stock Exchange. That's going to do it for today's show. Thank you for watching, and we'll see you back here tomorrow.
In life, I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege to be with you.